Over the past year, AI has become a frequent topic and a major focus as a new and emerging trend. The rise of ChatGPT has ushered in a new era where computers and technology can complete tasks that were long thought too complicated to be automated. And what about stock trading? If ChatGPT can create PowerPoint presentations, complex Excel formulas, or even write rap songs, can it be used to formulate algorithms to trade the markets? Long before the advent of ChatGPT, humans have been in search of ways to quickly and easily profit from the market. I've known quite a few people who bought subscriptions to trading bots. It seems so simple. Just buy the bot, connect it to your trading account, and wait for the cash to roll in. Whenever I hear these stories, I always cringe because I know the outcome will always be the same. The trader will end up frustrated, broke, and swearing the market is rigged. What's going on here? Why is it that in our age of such brilliant technology, humans still cannot find a way to automate the trading process? The first factor to consider is the fact that markets cannot be perfected. As Jesse Livermore once stated, I have said many times and cannot say it too often that the experience of years as a stock operator has convinced me that no man can consistently and continuously beat the stock market, though he may make money in individual stocks on certain occasions. Everyone's in search of a foolproof system that will guarantee they will make money. This is a fruitless path with an impossible outcome. You may be able to make money under certain conditions, but no one will ever be able to reach the point of total precision where they will be able to perfectly time their entries and exits or guarantee they will never lose on any given trade. It's simply unattainable because no one knows what the market will do. No one. To illustrate this point, think about what happened with long-term capital management. Here's an instance where the smartest guys in the world started a hedge fund. They even had Myron Scholes, one of the creators of the Black-Scholes model, for option pricing. LTCM thought they had a system for printing money. They believed there was no risk to their system. They believed they could not lose. Not only did they lose, they lost $4.6 billion in 1998 due to a combination of high leverage and exposure to the Russian financial crisis. Simply put, they failed to manage risk and to realize that no system, including theirs, is perfect. When someone invents one of these trading bots, eventually the bot will reach a period where it will start to lose money. If the markets cannot be beat, then it's inevitable that eventually every system will enter into a string of losses. What do you think will happen the second someone who's using a trading bot enters into a drawdown? It's obvious. They will start to get frustrated, abandon the system, and move on to a new bot, a new strategy, or even swear off stock trading and move on to real estate investing or some other financial endeavor. Even if a bot or strategy has been backtested for years and has a track record of profitability, there's very little chance the average user will follow its parameters. Everything sounds great until an actual trade is placed. It's like what Mike Tyson said, everyone has a plan until they get punched in the mouth. Every trading plan sounds good on paper, but then when the time comes to follow the plan, the will to follow through with the instructions all goes out the window. Without years of experience with a system, the average person won't have the wherewithal or conviction to follow through with the actual plan. For instance, let's say the system required the user to hold a stock as long as it held above a key moving average. As the stock became extended, the user may become fearful of losing their profits and sell too quickly. By making tweaks like this to a system, the user may be eliminating the attributes that actually lead to profitability. Remember, profitability is based on the sum of all your decisions, and seemingly minor tweaks or changes can yield drastically different returns. Another likely scenario would occur if the bot was programmed to sell a stock quickly to take a small loss. Not wanting to lose any money, the user may be tempted to bypass the system in hopes of selling on the next rally. Whereas the system would exit for a small loss, the trader who engineered these changes may invite upon themselves a massive loss. When you make decisions like this or alter a system, you render the system pointless. What's the use of buying a system or programming a trading bot if you have no intention of following it? As Jesse Livermore once stated, Stock speculation is a hard and trying business. If it were so easy to make money from the market that all you had to do was just buy a trading bot and hook it up to your account, everyone in the world would do it. But trading just isn't that easy. If you want to be successful as a trader, you have to commit to learning the ins and outs of a system. You need experience so that you have the conviction to stick to the parameters and the rules of the system. When you commit to years and years of analyzing the market, your studies and experience eventually intersect as you develop mental strength needed to profit from the market. Many are worried that one day their job will be eliminated by AI or ChatGPT. But what about stock trading? For me, this is of no concern, for I know that as long as there are humans behind the bots who experience the emotions of fear and greed, nothing, and I mean nothing, will ever change.